Good morning, beautiful people of the internet, and welcome once more to our Sunday special property chat. And as you can tell, we're joined by some absolutely stunning looking people. Sorry, Saif. We have with us Elizabeth Warburton, Helen Chorley, and bringing up the rear guard is Saif Derzi, Adam Lawrence, and Piotr Rusinek. So today, as you can tell, it's going to be a little bit of a turn away from what we normally talk about. So we're just going to throw Adam Lawrence's Sunday chit chat post in the bin. We're not even going to look at it today. It's nothing to do with us. We're just going to talk about these two beautiful people here today. So we have Saif Derzi, winner of Property Trader of the Year, and we have Elizabeth Warburton, who was winner of the New Property Investor of the Year at the Property Investor Awards. So we're going to ask them some questions. We're going to talk about the deals that got them where they are, and we're going to leave the chat open for you guys to ask questions of us. So I think the best way to do this is Liz, if you want to introduce yourself, and then Saif, if you'd like to introduce yourself, we can kick off with some questions.
Yeah, cool. Well, my name is Lizzie. Hello, everybody. I am part of Silhouette Property. I started investing about 2 years ago now, and I'm also a presenter, and that is predominantly my full-time job. And then I invest on the side.
Nice one. Brilliant. Saif, do you want to do a brief intro?
Yeah, just a brief intro. So Saif Derzi. So yeah, I sort of started off life as a pharmacist, then got into a bit of a pharmaceutical business, which led me into the property business. Probably in property for about 6 years now, I'd say in total. And we've probably bought and sold over 150 properties so far. So yeah, trading is definitely something that we are doing more of at the minute. So yeah, that's a bit about me.
Nice one. And I haven't been to Property Investor Awards, but all the people that I hear talking to Jay about it or talking to whoever about this, they are saying one major piece of feedback. How do we know what the awards were for? Like, we know who won, but what the awards were for? Like, this is like the most people are most curious about. It's like what actually was an application, what makes the winners. And it's one of the reasons why we invited you guys.
Wow. If you read Property Investor News coming out this month, you might get some insight. Me and Jay have written an article about kind of what it takes, like the criteria that we look for, and given a bit of insight into the judging days, which normally take place over 2 days in September. And we both absolutely love them. So yes, check out that article and you get some insight. I haven't gone into too much detail of the winner specific because I only had 1,600 words, but yeah, we can get into that today, can't we?
I think I've spoken to several people, and all of them have said some of the finalists, some of the people that didn't make it to the finals, were like, well, we want to know what other people are doing, what their deals are, so we can try and how do we one up them? How do we beat them next year? How do we make this a challenge? So yeah, like Piotr said, it would be great to kind of just hear about your application. Maybe if it was deal specific. I know for Saif it probably was. I don't think I got to judge your category, Liz, so this will be completely new for me as well. But just to kind of get a feel so people can go, wow, okay, that's the level, and I need to get above there to beat guys.
Yeah.
So Liz, do you want to run through your application or the deal that you kind of submitted?
Yeah, sure. So I think well, number one, the application process was so thorough and so in depth that there were 50 questions that you had to answer. You also had to provide video and picture evidence. So it really did take a long time to fill it in. For New Property Investor of the Year, you had to enter your very first deal. So getting to my first deal, I had like 4 or 5 fall through before I actually got this one done. So it kind of didn't feel like the first deal almost, because I'd done so much for like almost a year before I got to this. But yeah, the first deal was a flip project in Crosby in Liverpool, just kind of 10 minutes away from where I'm originally from. But the actual application went into so much depth of how that first 12 months had gone just in general, how I'd started in property, what else I was doing, what did I feel was my biggest achievement over that 12 months, what was my biggest failure, what went wrong. So there were a lot of other elements to my application as well, which is why I think I might have tipped Marco, who was also in the final with me, because it's been such a crazy year of so many different elements. Like I was in South Africa doing a big charity project where I donated 10% of the profit of that particular deal to fund the community centre out there. I'd also sold and sourced like £3 million worth of deals within that first 12 months, which helped to fund the flip. So there were a lot of different elements. It wasn't just necessarily that one project. So yeah, I think
from the judge's perspective, I think that was it. It's interesting. Some of the awards are deal specific. So obviously, deal of the year, HMO deal of the year are deal specific. But where it's about the person, so property investor of the year. So that was Max Scott this year. New investor. Where it's about the person, it's about kind of more than just a deal. So you will read, and I'm trying not to give too much away from my article. It's not always just like about like the numbers per se, which is interesting for me to say. It's about more. And I think what appealed to, certainly to me, I can't speak for any other judges because I don't know how they voted. But what appealed to me was the breadth of what you'd done. You hadn't just done one flip. You'd sourced, like you say, over 3 million quid in your first year. Like, that's really pretty impressive. And you were doing all these other things as well. So that's what certainly, appealed to me.
Yeah.
I mean, the interesting thing from a judging perspective is what the people that I've spoken to, like at the awards that didn't win, they were like, okay, so what was the deal? What were the numbers? And I'm like, well, you're kind of asking a very two-dimensional question, right? Even if it's not a deal about the person, sometimes it's about how the deal was structured. And sometimes how the deal was structured isn't necessarily reflective in the figures. It comes into a degree of cleverness, or it's about how they intelligently place the deal from start to finish to be very cost effective or reduce frictional transactional costs and do things like this. So it may not have the same ROI as your deal, but actually it may have been a quicker, easier, faster returning deal, depending on which category we're talking about. And that also has an impact because there are certain judges, you know, you've got the likes of Daryl Norkett, who's kind of, he's a Shawbrook Bank now. So he kind of looks at things from a very money kind of transaction point. And then there are some things that a lot of the judges miss. So I think with Saif's deal specifically, I don't think many people really understood what he had done or how he had done it. So there were some questions on the day, but super smart deal. And it's kind of like, especially with your one, Lizzie, where someone's going, okay, these are the numbers of the deal. People go, yeah, that was a decent deal. I'd do that deal. You do that deal. Anyone would do that deal. But it's kind of all the stuff that surrounds that as well that you have to take into the bigger picture. Bless you, Adam. And sometimes that is the distinction. That's the separator that goes, wow, this is award-winning kind of a position that you kind of given yourself essentially.
Yeah, and you know, when you look at mine, it is a very simple, very straightforward looking deal from the paper. But I was also very honest in everything that had gone wrong and all the challenges that I'd faced during it, which it made it become a much more complex deal for me as a beginner, you know, to sort out and get to the end of. I also managed to raise 100% of the finance for my first deal. That's quite a big thing for me to find the confidence to raise the investment. So yeah, it was. I'm very happy with how it turned out.
How did you first start investing in property? Was it was the inspiration coming from being on the show and the elevator show, or were you already in property before you started there?
Yeah, no, I wasn't. So pandemic hit and I had an entertainment agency. So events and hospitality, that all died overnight. And I'd actually just started a 12-month mentorship because I had a property in Croydon with my ex-partner that we were in the middle of selling, and I wanted to put that money to good use. Once we were getting rid of that, but I had no idea how or what to do. So that really helped me to focus throughout the pandemic, was having that kind of weekly check-in with my mentor. And then the presenting was already through my event company, but I was working in entertainment TV, so I would do red carpet interviews, film premieres, like live work. And so I decided to try and kind of niche it all together with the new career of trying to go more into property investment. So I found Property TV through Instagram, actually. Sent my reel, sent my CV, and Michael got back to me and he said he didn't have anything at the moment, but if something was to come about that he thought I was suitable for, he'd get back to me. And as a performer, you kind of write that off. You're like, nah, that's like on to the next. And then 3 months later, he contacted me and we had Property Elevator. So I went in and screen tested. And that was that. And I got that job. So yeah, it was great to kind of niche it all together within those first 12 months. Really, it helped to build my network in expansive amounts. The people I've met now and the contacts that I have is insane. I get to work with the lovely Miss Chorley all the time.
Nice one. I think that's the key thing for anyone who wants to start in property. Whenever and people ask me how to start, and it's if you get yourself involved in things like that pay you for being involved, and you also around good people, then it's much easier to take bigger steps and kind of steps in a new direction. So yeah.
And that's what you have done really well, again, and it was evident in your application. You've leveraged, you had a mentorship, the people that you met through the program, all those different bits you've really leveraged. And it's what I say, somebody came to me wanting kind of a consultation or kind of mentoring on commercial to resi stuff. I'm like, it's not my thing. I said, but this is the type of community you can join, and pointed them a few ways. Partners in Property, obviously, and then there's Commercial Property Alliance, and pointed them to that's where you want to go. You want to go and get somewhere we can leverage as much information and as many people as possible. And you've done that from day one.
Nice. Nice. Well done, Lizzie. That's a big success, and probably just the start of a big, massive career.
Yeah,
5 years time, we'll be
obviously, I wasn't a judge necessarily, so this is coming from an outside point of view, because obviously I know Lizzie quite well as well. But I think also, Lizzie, as well, it's everything that you've done, but also the likability that you have, because obviously you're coming in as a performer, I guess, into this industry, and obviously you started off the presenting and stuff. So people have that real likability factor towards you. I think you're probably one of the most likable property investors you could probably say in the community, because you are everywhere, and obviously being on the shows as well, probably lots of people have seen you and heard about you and stuff like that, which is a really, really good way to kind of come in quite quickly and have such a big impact, because loads of people come into this, can do some pretty cool things, but they don't have as much of an impact because people don't really know or understand what they're doing, whereas you're in the limelight, which is really, really good. And I think having that contact list of people that you've been rubbing shoulders with some pretty, I'd say, pretty big people in property, and having that contact list to, if anything goes wrong, contact them and get their guidance. So yes, it's not paid mentorship in a way, but it's a form of mentorship that's probably even better than paid, if I'm being honest with you. So yeah, I think that's what you've done really, really well, and you're just a really likable person. So I think overall, I think that's that's kind of my synopsis from an outside point of view, not obviously being on the judging panel.
Oh, thanks. That's really nice. Thank you.
So Saif, the time has come.
Yes.
Tell us about your deal.
Okay. Yeah. So I've done again, kind of that's probably me. I've done quite a lot of deals that I've not really talked about or shouted about for various reasons, mainly because I've been quite busy with lots of things. So it's been one after the other. So we do quite a lot of different volume, but also sometimes, you know how it is with the property world in general is you can get a lot of people kind of either doubting you or not trusting you or whatever it is. So I just thought, you know what, leave it out of the public domain. But anyway, so I decided to put it forward for Property Trade of the Year, and it was something where, from what I would say, is something that we wouldn't normally. It's not a normal deal that we would have done. So this was just taking you guys back to the pandemic. So this is 2020. I think it was getting to around about sort of October 2020. We had been approached through the cash buying company by a guy who basically had gone through a divorce, had a 3.5 acre piece of land on the market for about £1.2 million with a local estate agent. They'd clearly overvalued it, basically, probably by about 200,000, as they do. And we'd gone through a pandemic as well. So not only did he go through sort of 2018-19, which is a bit of a rocky period, if everyone remembers that, we then went through the Boris bounce back and then COVID, and it was just a series of highs and lows. And I think he got to the point where they were going through divorce and they didn't really have many options. They'd spoken to a few cash buying companies at the time, but they'd spoken to them a couple of months before they spoke to me, and times were really bearish. And basically, you know, most of the cash buying companies were just sitting and waiting. They were buying the houses, but not necessarily the more, I'd say, quirky type of properties and stuff. So yeah, so he came to us. It was a 3.5 acre piece of land. He basically said, look, I need you to complete on this within 2 months. And we said, look, well, we can't even get the searches and everything else in time. And he said, I'm happy to take a hit. It's not about the price for me. And I think he had bought it quite a long time ago. So he'd obviously built up a decent amount of equity. So he wasn't losing money on it. And I can't remember how. I think we just gut feeling just kind of sunk in. And we were just like, we would probably want to be around 475 for that kind of land. It genuinely was. There was no negotiation. There was no back and forth. It was very much a case of, this is where we'd be comfortable. It's not something we'd normally buy. It's a price whether you take it or leave it, because it's a bit of a punt, really, more than anything. And he basically accepted. So we got a RIC surveyor to go around to value the property, to value the land. So it had outline planning for 26 houses at the time, and the RIC surveyor came back and said, yeah, it's worth 975,000. So we said, brilliant. So we got 100% finance on that, because as long as we were at 50% of the RIC's purchase price, the funders were basically willing to lend us 100% of the purchase price. So all we funded really was stamp and legals on that deal. The difficult part was then, okay, we bought it, great. It was December 2020. We bought this piece of land. In October 2021, the outline planning was basically going to expire at that point. So we thought, okay, we don't want to get to a point where we're then having a bit of an unknown, because that's where the risk starts to go up for us in terms of if it gets to October 2021 and we have to then go in for full planning, whatever. So we decided basically to use auction as an exit, but not actually auction it off. We just use auction as a bit of a mechanism and a tool to be able to get a quick sale on the land. So we put it up for auction for, I think, 775. We spoke to a lot of like local builders that we knew, house builders, etc. We literally went to everyone. So the auction didn't really do anything for us. We just went out and sold it, but it was under auction terms. So if you want it, exchange contracts and paid 10% and complete in 28 days. We had all sorts of offers, £1 million, £1.5 million, you know, all sorts of offers. But the issue was they just wanted to take their time. And we didn't really, you know, for us as traders, it's about speed and certainty. And someone offered us, I think, 800,000 subject to a bit of groundworks within a couple of weeks. They did that. They ended up chipping us to basically got down to 750. But we said, look, we need to exchange contracts immediately. And we did. So we ended up selling it and completing on it in June 2021 for 750. And funny enough, they've gone on and they got full planning for 40 houses. Their GDV on that land alone, I think, was about 14 million, and their build cost was about 7 mil. So they're making a massive margin. And everyone asked me, would you not? And I said, no, I don't want to get in development. I'm not a developer. I'd rather take my money off the table and move on to the next deal. I'm just not patient. And I think that's the stuff that would give me a nightmare. Like, imagine being in that kind of project for 4 years over 4 phases, whatever, of development. So
Jesus,
yeah, for me,
no. And this is where, like, you know, property is very frustrating and very annoying. Well, certainly for me, people see the numbers and like, oh God, you know, do you have all this regret? You're seeing the numbers. Do you know how much risk is in there?
Yeah.
God, you know, hey, if you want to know about that, come and chat to me. I can start to see for hours about that. 6-month project turns into 4 years, and then the company goes into administration. You know, all of us on here, like, we've seen it all, right? Don't chase those big numbers just so you can get it. Say, I built 40 houses. Well done you. Who's paying your mortgage?
Well, that's the beauty of trading, really, isn't it, Saif? That's the beauty of trading, isn't it? Because your risk is your purchase price, essentially, because you'll have several different exits that you can work out. And the transactional speed, actually, it reduces more of your risk than you think. The longer you're in a deal, the more risk you can encounter. If you're a single buy-to-let landlord, you know, replacing a boiler can wipe out 6, 7, 8 months of your profit for that year. So, you know, trading, if you do it correctly and at volume, and as we know you do, you don't really regret someone making that money, because all you're looking for is the margin. You're just taking that margin, putting it in front of people that can actually do what they need to do with it, and then moving on to the next one. And you can't have regrets in that scenario. I mean, we don't have regrets when we trade. It's like, oh no, we've done well, we'll move on, someone else will make money on it. And you always leave a bit of, you know, meat on the bone for someone else to kind of take. So it's really
funny enough,
to talk about it.
Daryl, so I got called by, I guess, a couple of the judges at the time. They were just asking general questions about the deal and stuff. And Daryl's question to me was, if you got the RICS at 975, why'd you sell it at 750? And that is exactly what I said. I said, well, you've got to leave enough meat on the bone for the next. But, you know, as a trader, the worst thing you can be is a greedy trader. That is the worst thing you can be. As a trader, you need to know when to cut your losses and when to basically, you know, just take your profits. You don't run your wins all the time. You know, you're not gambling at the end of the day. So I think really, really important. And the other thing, from my perspective anyway, when you look at it as a whole, is just really understanding what you are. I've done development, I've done new build development, I've done commercial, I've done everything. And I quickly realized I'm not a developer because I'm just not patient. Like, I'm very conscious about what I can and can't do. And I'm not a developer, simple as that.
Yeah. And actually that goes for all trading. Adam will know this only too well. It's the biggest mistake you can make in trading, not taking your profits. And then you look back at the chart and go, oh, I could have sold up here. Yeah, you could have sold up here, but you could have waited till it gone here and mistimed it. And then you're trying to get out here when everyone else is trying to get out. Take the profit.
That's right, Crystal Ball. Absolutely. That is so right. And this is why IRR exists, right? Although not, you would think if you read the Facebook pages of various property gurus, but this is why IRR exists, because it ultimately measures how well you've done over a period of time, and much better to make a quick lift than try and this is what most people who dispose of assets don't understand. I want that extra $3,000 because it's psychological. Well, if I wait an extra 6 months to do it, my holding costs of $6,000, and then the opportunity I was going to put the money into has gone, and this, that, and the other. You're an idiot. You're an idiot. You know, this is why you can do deals, because speed and certainty ultimately are why someone like Saif is able to do a lot of deals, but also he understands the value of speed and certainty on the other side, right? So everybody has that. This is very, very similar to any financial negotiation you go into. You know, we have tenants occasionally who are saying, they usually start with something like, I don't mean to be cheeky, but can I have it for 50 quid less rent or something? And it's like, it's not cheeky. There's no problem with the question, but what are you giving in return for that 50 quid? Are you signing a 10-year agreement with a stepped rent clauses every year? Are you providing some kind of other guarantee or security? Oh no, you just want money off. Well, the trouble is there's 68 other people who want to look at that tenancy. So unfortunately, you're not really in a position to do that. So thanks for asking. I had a guy once try and buy something off me, and came to the door. This is why I hate selling things on Facebook Marketplace or whatever. I'm just not cut out for it, because I see these things a bit too black and white for most people. And he agreed the price, turned up, and then decided to negotiate. No, I just think that's the worst thing you can do, you know. And he said, and he turned up in a Merc, and he said, you know, well, he said, you know, you've obviously got more money than we have, because, you know, he was at my house. Like, well, I can't see your house. You might be a billionaire for all I know. Right? And he said, it's nice to be nice. And I said, the thing is, mate, if I want to give to charity, I'll go and actively do it. You pulled up in a Mercedes, now pay for it, or I won't finish the sentence, but you can imagine the alternative. Let's just say it involves sex and travel. And he paid the full price. But the whole thing left us both feeling reasonably hacked off. But Saif's absolutely right. It makes tons of sense. And I think the fact that people don't understand that is why they're not traders, for example. Yeah. It's a really good example of why they're not traders. And they shouldn't. And this is why I could go on a full rant here. Be careful. Ring the bell. But this is why crypto is dangerous, right? Because people who aren't traders got involved in pretending that they thought they were traders, and then in 2 years' time, or when the great split comes of 2024, or whenever the next reason for the Winklevoss twins to try and ramp it up to £3 trillion of Bitcoin or whatever they think it's worth, mostly because they're holding so much of it. Did I say that out loud? Then when that comes again, there'll be a load more people who aren't traders, who then try and convince themselves they are traders. There'll be a load more people who listen to what Saif said just then. It's not gambling, right? And the understanding of that fact, I sort of disagree with him, because it is gambling, but his approach to it is not gambling, and that's the point. He's de-risking what is an inherently risky strategy, and the not just the brains to do that, but the discipline, the understanding. There's traps all over the place for people to fall into. You know, it's been nearly impossible outside of property for people to make money this year in the world. You know, stocks, bonds, crypto, alternative gold, oil, commodities. Yeah, sure, if you understand commodities, but I bet you there's still a ton of people who've lost money on commodities this year, because when the freight train was running, they decided to get in. Oil can't go down because Russia and Ukraine are at war. Well, unfortunately, that's not the case, and there's a number of reasons why all that happens. And guess what? It's quite hard, which is why, you know, people get paid millions of pounds a year in order to trade this stuff and try and make money against people who, it's all very well going on Reddit or whatever and being part of Robinhood and Wall Street bets, and I'm up for all of that, but I also believe that 2 or 3 clever hedgies control most of the chat on Wall Street bets. So it's just another way to do a ramp, right? It's another way to do a ramp. That's a really interesting way to put it, because as a trader, you don't bet on the long shot. You don't, and that's what separates you from being a good trader to a shoddy trader. You never take the big odds. You never go, okay, it's 1,000 to 1. Okay, I'm putting it all on red or putting it all on black. You don't spin the wheel like that. In the same way that you know, the way that you mitigate your risk is part of your trading style. So everyone trades differently. I don't know 2 auction traders that operate in the same way, or have the same mentality, or have the same kind of approach to the assets they pick up. So it's a bit of a fingerprint style investment strategy. Everyone's going to do it slightly differently. But following on from your story, Adam, way back when I was young, I used to be a stall crier at Wembley Market. So I was a trader at Wembley Market. So it'd be like 4:30 on a Sunday morning, which is ungodly no matter who you talk to. Can I just say, I'd bloody love to have seen this. This would have been awesome. This would have been brilliant. I don't know if there's any videos, but it was. To be honest, I really enjoyed it, because we were selling basically children's clothes. One of my family members had a factory, and it was all the stuff that was either slightly too big for a size or slightly too small for a size, and you just take thousands of bits of clothing to Wembley Market, put it out on a couple of tables, and just sell away. And towards the end of every Sunday, for the last hour and a half, I would do my 3 items for the price of 2 table. So I've really got to shout it out. And this was like 3 items for like £5. It's nothing. And
I don't think you can even buy socks for 3 for $5 anymore. So we were out there, and I struck up a deal. This person bought like 6 items or something like that, so they were getting like 3 for the price of 2, and then started haggling on the price. They wanted to pay like £9 or £8, which is standard for a market stall. So I thought, okay, well, I quite liked it, and it was really towards the end, and I got some really good commission off of anything I made on that 3 for 2 table. So I thought, okay, even if I hedged the commission, I'm still up. And then they pulled out a £50 note, and I told them to jog on. So it's the same kind of thing. They were haggling, pulled out a crispy ready, and I was like, no. Yeah, you don't get to play that game.
Yeah. You give that to me.
Yeah, that's it.
Or you could have said no change given. Just put up a no change given sign or whatever.
So you came at the end of the day, we've already cashed in all of our change. Thank you very much. It'll go to charity or whatever. But
it's an interesting. So let me tell you about this story of a trader who gazumped us. One of the biggest traders in the UK, probably trades 50 properties a month, right? We were buying a portfolio of 6. Yeah, there you go. We were buying a portfolio of 6 properties at the height of the market. So I'm talking about probably March 2022, basically, where you couldn't pick stuff up for the love of God if you want to trade it on. Buying them all under stamp duty. We were taking a bit of a punt because done up, they were 70 grand. They were really bad. I'm talking about like proper bad. So we're paying under stamp. Last minute, we got gazumped and we didn't realize it. He paid 43 a piece or something like that. I was just like, look, it is what it is. And karma always comes back to people at the end of the day. And I just said, that's what I was prepared to pay. And I will not get into any kind of bidding war, not even for a penny more. Because also you get stamp at that level, I'm assuming, depending on uninhabitable relief and all the rest of it. But anyway, he then went on to try and trade these properties on, put them on the standard 5 grand guide, trying to attract all of the people that are quite naive to auctions and stuff like that. Didn't get up to where he wanted. I think they all got to like 35 to 39. I thought, okay, this guy's done me a favor here. Traded it through 5 different auctions within a space of 4 months. And I mean 4 months. And every single time it went sold, but it didn't actually sell. It went sold, it didn't sell. Then decided, so then he got an offer on one of them. I think it was, I can't remember which auctioneer it was, £42,000. Might have been Allsops, can't remember, it might have been Allsops. But anyway, got an offer of 42,000 and they're ready to exchange. And he said, no, I need more than that. Then this is the last ditch attempt. So this is post, now we're talking about post budget when everything's kind of going down. Ended up basically going with another auctioneer and ended up having to sell it at 31,000 because he just had enough of it at that point and he needed to cut his losses. And I think he made probably about a 45k loss on all of them. But the point is, that's the difference between someone that basically doesn't understand how to either take what he can off the table and cut his losses quite early versus someone that just wants to basically, just go for it and just try and maximize everything. It just doesn't work in the trading world. It really doesn't.
So I've got a very interesting story about, if it is the same character I think we're talking about. In 2016, I was still working for Auction House London.
Does his name begin with N? Let's just put that one out.
Narrowed it.
Hold on a minute. Yes, it does actually. Yes.
Yes. Yeah, okay, good. We're talking about the same illustrious.
I've got a couple of stories. I'll go after Jay.
My little brain doesn't have a clue who you're going on about here, and I need to know.
we'll give the lowdown in the post credits off screen. I think naming this person could cause a lot of financial issues for all of us. Okay. Although it depends on what kind of fight we're up for. But so I would go to a couple of auctioneers just to kind of see how they ran their operations, the contracts desk, and you bump into sellers because these sellers sell with everybody. There's no loyalty in auctions. You go where the next auction fits your timeline, or where you think they're going to get the best results, or where you've got the best relationship, or where they're not going to charge you any fees up front, or they may cut the fees back if you don't get the price that you're looking for. Or if you're dodgy, they may let you knock the property down and then pull it out and do all these weird and wonderful, disgusting, despicable things. So I walk into, I think it was the Allsops auction, it was the Resi, and I bumped into a couple of guys, really nice guys, and I said, "Oh, how are you doing today?" I think they had about 10, 15 properties in that auction. They're like, "Well, we're up and about 8 and we've still got the rest of the auction to go. So even if we break even on 3 or 4 and lose on a couple, it's still a decent day." And then we saw Mr. N in the far distance with his little headset in. And And I said, how's he looking? And they said, well, he's got 94 properties in this auction, and he's down on 36. They said, we don't know how many he's up on, but we know when it's down because he's not a good poker player. He's quite an emotive person when he's losing. So, but over the course of the rest of the afternoon, I think overall he may have been up maybe 200,000 or 300,000. But that was on, this is why traders don't look at potential profits, but he probably could have been up by about 500, 550,000 as a crude estimate, completely crude estimate. But because of the losses, he spreads it across what he was selling on that day, and he was up by about 200,000 pounds. So, yeah, but I've heard of his style of gazumping people before. He made a mistake of doing it. He made a mistake of doing it with a guy I know who is based in East London, kind of like Ilford, Chigwell kind of area. And this guy he's a really nice guy. But he took quite a bit of umbrage to this person he'd never met before, never heard of before, coming in and sniping a deal from him. So it got a little bit aggressive, and Mr. N went to their offices, and then Mr. N never did anything bad to them ever again. I don't know what happened in those offices. I don't know what was said, but this guy's got a lot of gumption, and it's highly unlikely that he would calm down for anything less than fear of life.
Wow.
So Adam, just before
Adam goes with his story, one really important point, especially with Helen on, so we're talking about risk. So when I say to people, when people are like, I don't want to take too much risk, I just want to do one deal and trade it and see how it goes. And I always say to people, that's actually where the most risk is. You need to do volume to reduce your risk, because then you can blend, if you do make a loss or whatever, you can blend things in. And I think even when you're investing in property, 1-2 properties, a boiler goes, that's quite risky because you've lost basically your profit for the year. So really, really important people understand the actual reverse mentality of actually higher volume, lower risk, lower volume, higher risk. And until people understand that, they can't really start to look at trading in a risk-free way, if you want to call it that. Well, it's never going to be risk-free, but as low as possible. But Adam, I'm looking forward to this one. So.
Well, yeah. It's not quite. I'm never as good at storytelling as Jay is anyway, so it's not as good as all of that. But it's a very, very similar sort of story, in as much as I found an auctioneer that I know well. We have a very good relationship. We have a bit of a laugh. He's not particularly interested in residential properties, more of a commercial property investor. He sometimes listens to this chat, so if he is listening, hello, you know who you are. And we had a chat about this one property that was in, let's just say, I wouldn't say it's my patch because I don't have a patch. I'm too nomadic to have a patch. But it was in certainly my business partner's patch over in the East Mids. And so I phoned him up and said, what's the story with this one? It looks, it failed at auction. It needs to be got rid of. Why don't we go, will he take 110 for it? Because that seems like the right money to me. He said, no, he's insistent. He's paid 120 for it, blah, 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 blah. And so the thing is, and it was the same gentleman we're referring to. And so the thing is, he has paid 120 for it, he's paid too much. He's sitting somewhere in North London. He's fired it up, and he's got it wrong. I don't know what to say to you. And he said, no. I was like, the auction's seen it. It's not going to do very well. And he said, in this instance, he held on to it for an extra 4 months. And he shifted it at 116 in the end, but he had to absorb the fees himself. So it wasn't materially much different from us paying the 110 and the fees. And instead of owning it for 6 to 8 weeks and taking it on the chin, he owned it for 6 months and left the money tied up in it, and the holding costs on top of that. He'd have lost money, But sometimes people just won't listen to logic, and I've been outbid by the same person before when I have made some of my rare forays down more to the capital, just in order to try and crowd me out. And he doesn't know it's me who's bidding or behind some of these bids, but what he knows is if someone's nearly got in on this or that and is in on some of the lucrative pipelines that the aforementioned gentleman uses, he considers it good business to overpay for stuff to keep the likes of me out, which is a bit silly, because one day the likes of me will be someone who's equally hard-headed and driven, and will just bid him up for the sake of bidding him up and leave him holding the baby in the proverbial sense, as you were saying, when 32 of the lots have already gone wonky at an auction. But I always do wonder whether it's just solely property trading that motivates some of this activity. But maybe we're going to take the conversation down a path we don't want it to go down if we do that. But
well, I have another story if you fancy it.
Let's do it. Go on.
So this auction was already going. It was a very non-standard auction. So this was the last auction that Auction House London did in the Everyman Cinema in Haverstock Hill, like just near St John's Wood. And the reason why it was non-standard is because there were some absolutely beautiful deals in that auction, like stunners. I didn't have the time, the effort, the energy, or the money available at the time, but I was tempted by a couple of them. So the cinema seats about 120 people. In the foyer, you maybe get 40 or 50. There are over 350 people in this cinema. So somebody called the fire marshal. So then we had to kind of allow people in and out in 10 lot zones. Like, what lot are you here for? It was an absolute mess. But Mr. N was there, and so were a couple of his, you could call them competitors, but more they were agitators and distractions for him for the most part. No, it's kind of like a whale getting a barnacle. That was the kind of level of like the comparison between the two groups. Anyway, this property came up, and it was in, is it Bruce Grove in like, is it South London or East London? No, it's Bruce Grove, isn't it? Yeah.
It sounds like Tottenham.
Yeah, it's in and around the area, and it was horrible, but it was perfect for auction because you could do anything with this asset. Literally, you could set it on fire and it would be worth more money at the end as a piece of art. It was absolutely horrendous. So then these 3 or 4 other chaps stopped.
You need a name for like Banksy, but also an arsonist. I don't know what to call it.
It could be Burnsy, couldn't it?
Think of Burnsy. I love it. Very good.
But you could see there were like these 3 or 4 guys that were together. Then, as the bidding for this property started, they do what we used to suggest in the book that you do is if there's more than one of you there, you break apart, which means you're distracting other bidders. They can't pinpoint where you are in the room or what you're bidding, and it kind of discombobulates the auctioneer to a certain extent. It doesn't always work. Depends on how good the auctioneer is. So these 3 chaps break up in the room and they start bidding him up. He's no idiot. He's been to like 1,000 auctions, probably without exaggeration. And he was getting really upset. And then they obviously won. They got really, really close to winning the property. And he made a final bid. And then all 3 of them just backtracked and then stacked together. And they were at the back of the room. They were acting like they were upset. And he knows he's just been bid up about £15,000-20,000 more than what he wanted to pay. But it was like Adam said, he wanted to force them out of the room, but he didn't want to pay that amount above. The property was like 150 grand, like finished, and he paid like 165 or something stupid like that. So he came and filled out the paperwork, and afterwards he went over to these 3 lads, and it was slapping, wasn't punching. These are not punchers. These are not the kind of people that punch, but they were slapping each other. They were pulling each other down. They were trying to throw each other on the floor. I was sitting there thinking, no, you got to toss it up between, is it going to be KY jelly or is it going to be mud wrestling? Are they going to be slipping and sliding? Because there was going to be tefillin everywhere by the time they finished. It was absolutely horrendous. It's probably one of the funniest scenes I've seen at auction, because they disrupted the whole auction. The auctioneer had to stop the auction. Bear in mind, there's more than 350 people. We had to allow people to come in groups and take them out in groups because we couldn't fit them in the auction. And then these guys were kicking off, having a real little sissy fight at the back of the room. It's absolutely quality. You don't see it happen very often, but if you can outmatch someone like that, it is well worth getting slapped with his lettuce of a handshake. It's absolutely brilliant. I've thrown in a couple of digs there. I hope everyone can respect that.
Yeah, I like how we started off with the sort of starter property investor kind of advice to all the way to the top level professional boxing in the auction.
We should invite them to the next white collar boxing event that Paul Champolina runs, and just let two of them go at it in the middle of the ring. It'd be absolutely hilarious.
I actually did one of them when I was 26. I did one in the Hilton in London, trained up for 12 weeks and then went in the ring. It was awful.
Did you win?
I did.
Did you win?
I did win. Yeah, but it was
this is an episode of winners, Liz. Okay, an episode of winners.
Yeah. And you put an angry Scouser in there, you kind of can't not win, can you?
I love that. I was about to say, I know a few people I'd like to get in a ring. Jeez, they wouldn't come out alive.
Yeah. So the training was awesome, but the actual fight is awful. I don't know how people do it, that much adrenaline, and you come off and you're like, ooh. Well, I was anyway. So crazy.
Talking about rings, has anyone been seeing Matt Siddell's posts? Because I think that's been keeping everyone entertained.
Oh,
can we get
talk
into that,
about
please?
light the blue touch paper and retire? Goodness me, Steve, this is big. This is big. I'll add my 3 penneth worth first, if that's okay. I had the temerity to post on one of those with a link to the administrator's report, because I'm very boring and annoying and I like to look at real facts when these sorts of debates are going on. And I then got admonished by someone for, you can't talk about this. You can't talk about this. It's going to scupper the deal that's going on in order to save everyone from this scheme. So I'll give you a brief rundown of the administrator's report and my take on it. People had put 40 million quid into this limited company. There was more money involved than that in the scheme, but it wasn't clear what had gone to a company, what had gone to a personally named account, what had gone to here, there and everywhere. But it was all okay because there was a deal on the table for someone to buy the scheme for 100 million quid. There was a bond already agreed with a, let's say, difficult to identify buyer. And I was being shouted down saying, you talking about this is risking people's money. I'm like, the administrator's report is on Companies House, right? And the administrators are so convinced the money's come back, they're working for free. I'm not sure you understand the statutory responsibility of administrators or the schedule of fees that the administrators have already laid out in said report. So I find it unlikely the administrators are lying about what they're going to charge in the statutory report. Nor, as I understand it, are there any administrators who are registered charities or community interest companies at this time. And then it kind of escalated to, I was like, look, if someone was going to pay 100 million quid for whatever assets are left wherever they are, and I suspect the answer is 0 or a negative number, but if someone was going to, the only debate they're going to be having is whether they pay 0 pence in the pound or 1 pence in the pound. The money's gone. But as my uncle Lester said, as he says in Rounders, as my uncle Lester said, when the money's gone, it's time to move on. And trust me, on this one, the money is gone. So whilst Matt's methodology or particular je ne sais quoi might not be for everyone on these subjects, especially the contents of the phone call one that he shared, which was pretty incredible, was something at lock, stock and 3 smoking barrels, I'd probably call it, to be honest. But the reality is this: in these situations, the reason I'm not trying to be difficult. I posted the administrator's report to say to people, do you know what you can do? You can go to Companies House in these situations. You can read the report. The report kind of says the administrator's saying, here's what we expect to recover, right? £100 million bond, uncertain. And then if you read the text, the administrators are fairly scathing with the probability of recovering the funds from this bond. And it's just like, look, guys, read into these things what you will. And do you know what happens if you backtrack years and years? Do you know what happens? Guess what? Someone driving around in a Lambo with people lying on bonnets of various things wasn't actually making the money they said they were. I know suspend belief. I know that's unbelievable, but that's exactly what was going. And guess what? Get rich quick, regardless of how clever or how wealthy or however the people were who got into these schemes, it doesn't work. I think all these guys were trying to do was see if they could jockey for position for the biggest scammer in Milton Keynes. But as we all know, that place is already taken up by... What a shame, my microphone went on mute at the wrong moment. But it does appear to be a hotbed of troublesome characters in these situations. You know, it's just, if it looks too good to be true, it probably is. Have you ever heard that one before?
First of all, I've had to push back my 10 o'clock meeting for this, first of all.
Yeah.
Second of all, yeah. So what I like about Matt is, apart from the guy is an entertainer, like an absolute entertainer, he loves it, is he's doing stuff that other people are really worried about doing, which I understand. You know, there's lots of different defamation and everything else that can happen within this space. But I think the fact that he's bringing it to people's attention is really, really important. And also in an entertaining way, because that phone call was absolutely brilliant.
And he's bringing it to people's attention when other people who would really like to be able to do that are unable to.
Yeah. And it literally is, people are almost gagged because of whatever NDAs or whatever crap that they have to sign in the small print. And he's allowing them to have a voice. And, you know, when people are like really, really hurt, they're looking at this and thinking, wow, I've got my energy back. So, yeah, Matt Siddell, we salute you.
I mean, I haven't got a clue what you're going on about, so I'm going to have to go and look at all this after we get off.
We've got another conversation after this.
It's all on Instagram.
Yeah, there's been several things today, and it's like, ooh, I need to learn more.
But I mean, I don't know if you remember this, Adam, but one of the guys who is fiercely defending this whole situation and saying there's £100 million bond and is like very aggressive responding to all
I know what you're going to say.
I know
what you're going to say, but go on.
It must have been in lockdown when he had posted something into a group that you're a moderator of. And he was just, and I think you and Helen were both going, no, this is not how this works. And I think he'd either already put the money in or was about to put the money in. And I think even I posted on there going, you should not be, whatever you think you're doing, that's not what you're doing. This is not the way forward. And fast forward 18 months or 2 years or whatever it is. And then this is that. I mean, you have to feel sorry for him to a certain degree, because he's drunk so much of the Kool-Aid, he doesn't know what's right and what's wrong. At the same time, I have very little sympathy for people that just, because they were offering really, really outrageous returns. And this is what I mentioned earlier on. You don't take the long bet. It doesn't matter if it's property, doesn't matter if it's FX or it doesn't, whatever it is, you never take the long bet, because that's why it's a long bet. It very rarely pays off.
Well, I mean, I read. Do you remember, Helen? That I think you remember the post we're talking about, and you put an awful lot of effort into it.
Because I had to in the end, just step back. I'm like, this is just giving me palpitations. I had to step back.
I read through it again, and I was like, and I reposted it in our PIP community group not that long ago when Matt put that voice recording up, because guess what? What we said was still relevant 2 years later. And indeed, you're dead right. And unfortunately, that person is in denial that money has been lost. And there's there's a fantastic interview with a guy called Edward O. Thorpe, who is the father of card counting, and also worked out a way to beat roulette. So he's an all-time hero of mine. He's like properly on the podium. He's on the shoulders of Buffett for me. He's a complete legend. He's interviewed on Tim Ferriss's podcast. He's still alive. He's 89. Looks like he's about 65. I mean, he's in incredible condition. His mind's still absolutely as sharp as a razor. And he does this interview because what I didn't know about him before that interview actually was, not only was he an awesome gambler who wasn't really a gambler because he worked out to turn things into his favor, he also was a hedge fund manager and made a lot of money trading. And that interview, it's about an hour and a half long. he wrote a book called Beat the Dealer, which is one of those where you kind of think, mate, why did you write the book? Because you could have made God knows what from just having the best life card counting. But actually his roulette system was better. But he talks about all of this stuff on that podcast with Tim Ferriss. And I would highly, highly recommend it, because that'll soon sort you out as to whether you think that it's worth trying to get rich quick. And it will also answer questions like Helen and I was trying to answer in that thread, where ultimately it's kind of like, who do you think's on the other side of these trades when you're trading for? It's just a bunch of dickheads? Or actually, surprisingly, are they just incredibly intelligent, smart, fast, ruthless, brilliant decision makers who get paid 7 figures a year to do what they do, with billions and billions of pounds behind them?
With market moving monetary power, right? You think 40 million is not, it's piss.
It's not a pebble.
These guys
not a butterfly's wings. Not a butterfly's wings in Croatia, my friend.
That's one trade, whatever, and we do how many a day? I've sat, and that was the frustrating thing. Like, and this really has been my lockdown lesson. Like, there's just some people you cannot help. It's like I sat with these people for 11 years, day in, day out, for let's call it 15 hours a day. And like I felt stupid most of the time. And I wouldn't consider myself a stupid person. So if I consider myself stupid, you've got no idea of how these people's brains work. They don't need AI, let me tell you. They got it. That's how their brains work. And that's who you're playing against. And you think you're going to win? Braver than me.
Mm-hmm.
Yeah.
Amazing.
Share the link to that as well, please. The link to that podcast. But yeah, a long time ago,
I'll put it in the chat. I'll put it in the chat. Sure.
Please. Yeah, a long time ago, I figured out I'm never ever going to win against AI, supercomputers, people that are cleverer than me, and that's the whole reason I stay within my circle of competence. There's even within my circle of competence, I know very much. Piotr, we talked about this the other day. Commercial property is not my bag. And I've done a few property commercial trades, which haven't been great because it's not my bag. I don't really have a specific niche within that. Stocks and shares, you name it, everything is not my bag. So I just basically can bat it off quite quickly. And I'm so specific and niche to say, residential property, that's what I can do. Give me that, I'll trade it all day long. Give me anything else, not interested. Don't care how much money you guys made from it. I know I can't do that. And that's if you've even made that money, let's be honest. So really, really important for people to really be conscious about what they can and can't do, but also in the real world, who are you working against? Who are you playing against? Who is the one that's going to be losing the money? And 99% of the time, it's the retail investors or traders, if you want to call them that.
Because the information isn't there. It's asymmetric information. I don't know how long I've been talking about this. Maybe that's the cause of the workshop I should run, why you shouldn't invest in FX or play against big boys.
It doesn't put people off, but 2 bits of relevant information. And you go on to like IG Index or City Index or one of the spread firms that you can bet with, either on sports or on financials, to be honest. I don't think City do sports, actually. I think it's just financials. And they'll tell you 74% of retail accounts lose money. Right now, the problem is that's the same problem as going into a room of 50 people and going, right, put your hand up if you think you're better than average driver, and 48 people put their hand up. Not laughing at the irony that by definition only 25 of them can be, only 24 of them can be better than the average, realistically. People just aren't good at quantifying this sort of stuff. And there's a piece that I put in my piece, my article for Property Investor News this month, and it says the famous investment firm Fidelity once surveyed their retail customers because they were interested in performance and what was making retail customers do well, and the top 10% of those retail customers, top 10% performers, were dead, and the next 10% had lost their login details to their accounts, and that tells you what you need to know. That tells you what you need to know.
Yeah.
Nice one. Well, I think we've kind of rounded it up very nicely. And
we were just getting started on the crypto and the scams. What do you mean?
That's next.
Can we have a part 2 of this, please? Can we have a part 2? That's all I'm going to say.
Definitely. Well, now people can, I guess, can see what's so addictive about us getting at 9 a.m. in the morning and doing those chats. Nice one. Well, Saif, Lizzie, thank you for joining us as guests today, and the chat's been amazing. And thanks, Adam, Helen, and Jay, for making it super entertaining and informative. And we'll see you guys on next week, and we'll respond to the comments later on during the day.
Thanks, guys.
Thanks, everyone.
Thanks.